Today, we will talk about how to invest your first $1,000 wisely. Investing your first $1,000 wisely is an exciting and crucial step toward building wealth. While it may seem like a small amount, the way you invest it can set the foundation for future growth. The key is to make informed decisions, manage risk effectively, and invest with long-term goals in mind. Here's a guide on how to invest your first $1,000 wisely, with a focus on strategies that balance risk and reward. 10. Start with an emergency fund. Before diving into investments, the first step is to ensure you have a solid financial foundation. If you haven't already, use some or all of your $1,000 to build or contribute to an emergency fund. This fund acts as a safety net for unexpected expenses like medical bills, car repairs, or job loss. Ideally, aim for 3 to 6 months' worth of living expenses. Having an emergency fund ensures you don't have to sell your investments prematurely in case of an unexpected financial emergency. Once your emergency fund is in place, you'll have the financial security to start taking more calculated investment risks. 9. Pay off high-interest debt. If you carry high-interest debt, like credit card balances, using your $1,000 to pay it down may offer the best return on investment. The average credit card interest rate can be upwards of 20%, and paying off that debt is like earning a 20% return on your investment, which is hard to beat. By reducing your debt, you not only save money on interest, but also improve your credit score and financial health. Once your high-interest debt is cleared, you'll have more room in your budget to allocate toward investments in the future. 8. Invest in index funds or ETFs. If your emergency fund is set and you've paid off high-interest debt, index funds or exchange-traded funds, ETFs, are an excellent place to invest your first $1,000. These funds are a diversified collection of stocks or bonds, meaning you're not betting on the performance of a single company. They offer lower fees compared to actively managed funds and tend to have steady long-term growth. Investing in this index fund gives you exposure to a wide range of industries and companies. Historically, the S&P 500 has provided an average annual return of around 7 to 10% over the long term. 7. Robo-advisors for hands-off investing. If you're new to investing and prefer a more hands-off approach, robo-advisors can help manage your $1,000 wisely. Robo-advisors are automated platforms that use algorithms to create and manage a diversified portfolio based on your risk tolerance and goals. Popular robo-advisors include Betterment, Wealthfront, and SoFi. Many robo-advisors also have low minimums and fees, making them accessible even for new investors, with only $1,000 to start with. With a robo-advisor, you can invest in a range of asset classes, including stocks, bonds, and real estate, depending on your risk tolerance. 6. Invest in dividend stocks. Dividend stocks are shares of companies that pay regular cash dividends to shareholders. These stocks offer two potential sources of income: dividends and capital appreciation. Dividend-paying stocks are often found in well-established companies with a history of stability, making them an attractive option for beginners. You can start by focusing on companies with a strong track record of paying and increasing their dividends. Some popular dividend stocks include those from the utility, consumer staples, and healthcare sectors. 5. Start a Roth IRA. If you're thinking about long-term growth and tax advantages, consider opening a Roth Individual Retirement Account (IRA) with your $1,000. A Roth IRA allows your investments to grow tax-free, and you can withdraw your contributions, not the earnings, at any time without penalties. By starting your Roth IRA early, you can take advantage of compound interest, which can grow your money significantly over the decades. For a Roth IRA, index funds and ETFs are great investment options. 4. Peer-to-peer lending. If you're open to higher-risk investments, peer-to-peer, P2P, lending platforms like Lending Club and Prosper allow you to lend money to individuals or small businesses in exchange for interest. These platforms typically offer higher returns than traditional savings accounts or bonds, but they come with a higher level of risk since there's a chance the borrower may default. Before investing in P2P lending, it's important to diversify your investments across multiple loans to reduce risk. If you're willing to take on more risk for the potential of higher returns, this can be a suitable option for your first $1,000 investment. 3. Real estate crowdfunding. Real estate can be an attractive investment, but it often requires a significant amount of capital. However, with platforms like Fundrise and Realty Mogul, you can invest in real estate with as little as $500 to $1,000. These platforms allow you to pool your money with other investors to fund real estate projects, including residential and commercial properties. While real estate crowdfunding provides opportunities for passive income through rental income or property appreciation, it's important to understand that these investments can be illiquid and might take years to see a return. However, for those seeking a more diversified portfolio, it can be an exciting option with your first $1,000. 2. Learn to invest in cryptocurrency. Cryptocurrency is an increasingly popular asset class, and while it's highly volatile, it can be a great way to diversify your investment portfolio. Bitcoin, Ethereum, and other cryptocurrencies have seen significant growth over the last decade. If you're considering investing in crypto with your first $1,000, make sure to educate yourself on the risks and trends. You can start small and invest in a few reputable cryptocurrencies on platforms like Coinbase, Binance, or Kraken. However, because the market is volatile, only invest what you're willing to lose and never put your entire $1,000 into cryptocurrencies. Instead, consider allocating a portion to crypto while keeping the rest in safer assets like index funds. 1. Education and self-improvement. Investing in yourself is one of the most powerful ways to use your first $1,000. If you're not yet comfortable with investing, or you want to acquire a new skill that could increase your earning potential, consider using some or all of your $1,000 for educational courses, certifications, or books. For instance, a course that helps you advance in your career or learn a high-demand skill could result in a higher-paying job or a successful side hustle. This form of investment provides returns that are not always immediate, but can be incredibly valuable over time. What do you think of our video? Let me know in the comment section below. Also, subscribe to our channel before you go. Thanks for watching.